We begin at looking at where property prices moved in 2019. We have seen house prices in satellite towns have dropped by 0.5%, the first ever drop since we started measuring this segment in 2008. Satellite towns have traditionally shown resilience, and a drop in property prices in these areas shows that buyers are finding the economic environment challenging and are adopting a wait-and-see approach, which entails shelving buying decisions until local environment improves. Moving to the letting space, rents in satellite towns dropped by 2.1% in 2019, the first ever drop, showing that landlords are less demanding in response to challenges in the rental market, especially in areas where there's an oversupply of similar units. Rents in Nairobi suburbs also cooled during the year, falling by 2.3%. Today, we also report our annual results on land prices, and we have noted that land prices in suburbs increased by 1.69% over the year, while the satellite town prices increased by 6.93% over the same year. The subdued increase in land prices in the Nairobi suburbs is due to developers demanding lower prices. The falling prices of apartments in high-density areas means developers equally must buy land at lower prices if they are to maintain some margins. Spring Valley posted the highest annual asking prices for land at an increase of 8.5%, while Riverside recorded a 9.24% drop over the year. Kitengela recorded the highest increase over the year at 10.7%, while Mlolongo saw prices drop by 2.8% over the same period. Upper Hill still retains the most expensive land at 539 million per acre, while Ruaka tops the satellite towns with an acre going for 91 million. Government is the biggest injection of funds into the market through its spending, right? Majority of liquidity in a market comes from government spending, right? When the government spends, and let's say businesses are able to have to grow, then they pay the employees more. The employees are then able to buy more goods. Therefore, the person creating those goods has to create more goods because people are buying more goods. So they have to employ more people, right? Who then require goods, right? Then they have to employ more people because more people require goods. And that's how an economy operates. Is when there's money in the economy, it's like it just keeps going up because more people are employed, they need more, so businesses produce more and they employ more people and then they eat more, right? That's the upward cycle in an economy. When the opposite happens and you're removing money from an economy, it's a downward spiral. So what that means is that the businesses start laying off people or paying people less. Those people require more goods, so the factories have to produce less. That means they lay people off, which means those people need to buy less. Are you seeing the cycle? When that happens, those people then cannot afford houses at the rate that they used to. So they'll start demanding prices, they start buying at lower prices, which means people then have to drop their prices. So in a tough economic environment, especially where liquidity has been pulled out of the market, then you'll see the demand for products also get stifled and prices go down. So that's number one. Your second question was? Nairobi. Nairobi is exactly the same trend. A 2.3% reduce in rental prices was because the same thing, the liquidity of the market resulted in less demand for goods and services. All right? And your third question was about the glut. Now, remember how I said that the property market no longer has, it's not you can't look at the property market and say it has a glut. There's some segments of the market that have a glut, right? So anywhere where you're seeing housing stalls or a bunch of buildings, Kileleshwa, Kilimani is a big example, lots and lots and lots and lots of construction, where that's an example of a glut, right? And even then, a glut of what? I would say it's a glut of larger apartments. The smaller apartments, they are still moving, right? So you have to look at where are the gluts and keep away from those gluts. Those gluts will have price corrections, right? And that's just so there's no glut across Kenya.